Saturday, December 14th, 2019, Monaco 64, home of alternative economics and contrarian views. This morning, I want to talk about the price of gold, the Dow Jones Index, the Dow Gold ratio. I want to talk about the word reset that's used very often these days and what, in my opinion, it really means. Before I start, though, I get a lot of new subscribers, new viewers every day. And the other day, someone asked me in relation to gold, how can I buy gold? You can access the Bank of England. I think it was just because I spoke about in the video that I walked past the Bank of England, right? But no, you can't buy gold from the Bank of England. Anywhere in the world, the easiest thing to do, and that's what I did back in 2002. I searched online where to buy gold, right? And you get a lot of results. You need to do your homework, right? You need to look at what kind of gold you're going to buy, right? Where you're going to buy it from. Of course, the bullion or gold dealers or silver dealers, they charge a premium in relation to the spot price that you see, right, in the market. So with that, being in the UK, in London, I have dealt with several bullion dealers. Right now, I have a promo code with Gold Investments. They've been in business since 1981 in the city of London. I've been dealing with them since 2002. The promo code is Monaco64, and you get 0.5% discount on all your purchases from them. And they can ship all around the world. Am I saying you should buy from them? No, you need to do your homework and see if it's worth it. If you're outside the UK, if it will be worth them shipping to you. I've spoken to them recently. They said that some people prefer buying from them even when they're in Canada, for example. Apparently it's cheaper for them in Canada to buy maple leaves from Gold Investments in London. But you need to do your homework. And before I go further, so what kind of gold should you look at, or silver? Well, there's all kinds of coins and bars. I mean, this is the smallest I have, I would say. It's a 1/20th of an ounce of gold. It's a little maple leaf coin, right? It's a bullion coin. What does that mean? What's the difference between a bullion coin and a normal gold coin? Well, bullion coins are usually minted nowadays. The other gold coins were coins that used to circulate when the system actually used gold as a currency, right? So you have little bars as well. I've got here a little 5-gram gold bar. You can also get 1-gram bars, which is smaller, of course. And then you have coins like sovereigns. They're a bit bigger. They're just under 1/4 of an ounce of gold. That's a sovereign. They're very popular in the UK. They're legal tender in the UK. They're normally worth £1. Of course, they cost a lot more to buy, and you can get a lot more than £1 when you sell it. There are, of course, 1-ounce coins. There are bigger bars as well. For silver, you can buy bullion silver coins, which are the same concept as the gold bullion. They're minted nowadays. They don't circulate as money. This is a 1-ounce silver Britannia from the UK, right? And then you have the coins that used to circulate. You can still get them. I've got here a half crown. That's a UK sterling coin. Prior to 1920, the coinage in the UK was 0.925 silver. So there's 92.5% silver in here. You don't pay VAT for these. In the UK, for these you do. And then you have like a $50. This is from 1962 or 63. It's got Benjamin Franklin, the Liberty Bell. This is not a bullion coin because it used to circulate as 50 cents in 1963. So I hope that helps. Check out Gold Investments. Use my promo code if you call them or contact them online, Maneko64. And don't just look at them. Do your homework. Look at other places. You might get a better deal, right? Before I look at the technical charts for the Dow Gold ratio for gold, I want to talk about what gold really does and why it's important to look, in my opinion, at the Dow Gold ratio, right? Gold, as many of you know, has been the most stable store of value for about 3,500, 4,000 years of history. So it's the ultimate store of value. It's very stable. And that's why I think it's important to look at the stock market in terms of gold. And that's what the Dow Gold ratio does. It's the price of the Dow divided by the price of gold in ounces, right? Prior to 1972, prior to August 1971 to be exact, the monetary system, through the Bretton Woods system, the dollar was supposed to be as good as gold. Not domestically, of course, but internationally, $35 was the equivalent of 1 ounce of gold, and that didn't change since 1944 or 1934 actually. In the US domestically, gold circulated as money and currency up until 1933 at $20.67 an ounce. And then FDR, of course, banned gold ownership in 1933 with the gold confiscation executive order, right? People had to hand in all their gold to Federal Reserve banks, their regional Federal Reserve banks. And then in January 1st, 1934, he reset the price of gold in dollars to $35 an ounce from $20.67. So the Treasury and the banks did very well because they got the gold at $20.67, and now gold was worth $35. The public didn't do very well because they got a piece of paper worth $20 and some change, right? And now they needed $35 to buy the gold back. So price went up. Of course, they couldn't legally do it anymore. So up until 1933, basically, the price of the Dow, if you look at charts, was basically what we have nowadays, the Dow Gold ratio, right? If you really want to be exact. The price of the Dow that we have now above 28,000 is not in real money terms, right? It's in Federal Reserve notes. And that's why I think it's important to look at the Dow Gold ratio. As Jim Sinclair and Peter Carlin said in this book, A Pocketbook of Gold, here on page 70, it says gold is a revealer of falsely stated wealth. And that's why I think it's important to look at the Dow Gold ratio, because we all know that these markets are phony, that the Federal Reserve and other central banks are creating credit or fiat money out of thin air, right? Not really worth anything. Gold, on the other hand, very hard to come by. You need to work hard for it. You need to mine it. It's not easy to mine gold, right? I recommend Gold Rush. It's a program, reality program that's been going on for quite a few years, and you see how tough it is to get gold out of the ground, right? Central banks, all they do is type on a keyboard and create their phony money, right? So enough of that now. So let's look, where are we going to start? I'm going to start with the Dow Gold ratio, and it's a chart going back to 2015. So almost 5-year old chart. It's a weekly chart. So the Dow Gold ratio, as I said, is the price of the Dow index, one index, let's say 28,000 divided by the price of gold in ounces, right? Right now it's around 1476 or 75, and you get the ratio. So the higher that ratio, that means that the Dow is outperforming, right? Gold. The lower, when that ratio drops, it means that the Dow is underperforming or dropping in relationship to gold. So as you can see here, October or end of September, beginning of October last year, that ratio got almost up to 22.5. And ever since then, we've been making lower lows and lower highs in that ratio. So the trend has been down. That means the stock market has underperformed gold. So when we hear that the stock markets are making new all-time highs, yes, they are in Federal Reserve notes, in phony money, right? But in real money, as you can see, it's a different story. And I think that's why it's important to look at this chart. Of course, the Dow's continue to make new highs versus dollars or Federal Reserve notes, but gold is actually gone up faster. That's why gold is outperformed, right? Right now, as you can see, if you look at this chart, it looks like it's forming a head and shoulder formation. We've tested the neckline of that head and shoulder back earlier this year, sometime in September, when gold traded up to 1550, and then it's rebounded. But to me, it looks like momentum is being lost here in the Dow Gold ratio, and we're going to go back down to retest those levels. That's the way I see it. It could be that the Dow remains firm, but I would expect gold to outperform, to go up faster, or it could be that the Dow starts dropping a bit and gold starts going up, or it could be that the Dow doesn't change but gold goes up, right? Anything, it's all relative, right? So that's the shorter term picture. That's why I think the stock market is not really doing as well as it seems when you look at the stock market in terms of gold, right? And now let's talk about the reset and have a look at a long-term chart of the Dow Gold ratio, right? So a lot of people talk about, oh, we're going to have a reset. I've spoken about it in the past. I've said that we will have the reset complete when the Dow Gold ratio trades near 1, right? When the Dow, the price of the Dow is the same as the price of gold. I don't know what price that will be, right? If it's going to be 30,000 to 30,000 or 500 to 500. I just know that in relative terms, gold and the Dow will rebalance to 1 or reset. And if you look at the word reset, synonyms for that word, one that I think is interesting is corrected, right? It's a correction, right? So a lot of times corrections don't happen all at once. They take time. That's why I personally think the reset has been ongoing, and I'll tell you why when we look at this longer term chart here. This is from longtermtrends.net, and this is the Dow Gold ratio going back 150 years, as you can see. So you can see that when that ratio tops, that means the stock market has topped and is overvalued versus gold, right? And then you have the correction and the reset towards the zero line or just above 1. You had that in 1929 to 1933, right? The reset was complete there in 1933, 34, and then you had stocks overvalued again in 1966. That ratio went up to almost 27. And then it took until 1980 for the reset to complete, the correction, as I said. And the Dow Gold ratio was below 2, around 1.41. In 1933, it's also below 2, right? Just around 1. And then you had another bubble here, the dot-com bubble, and the Dow Gold ratio went up to like 45. And we've actually been correcting or resetting ever since. because we haven't made a new high in that ratio, and we haven't really gone close to zero or to one. I think in after the 0809 collapse, if they hadn't thrown everything at the system, the kitchen sink, all the QE, the money printing, the bailouts, I would say that we would have had reset already, the Dow Gold ratio, and we would probably be a lot better off recovering the economies. Have you noticed that all the people that have benefited from the last 11 years are the people at the top? The general public is feeling it. So there hasn't really been a total reset. And that's why I think this is just a correction of the reset here since 2011, when we that ratio dropped to around 7. All we've seen is a correction, right? As I said, we got up to 22.5, and I think we're going back down now. And so yeah, when we get near 1, I think we'll be very close to the rebalancing or the reset. Let's look at some gold charts. Gold silver ratio charts, right? First chart I'm going to show you is the longer term monthly chart of gold. I've spoken about this Fibonacci retracement analysis, the high, all-time high into 2011 at 1921, and the low we had in December 2015 at 1046. The 50% retracement, I've spoken about this number already before, 1483. You can see how the market is hugging that retracement level, right? We're very close to getting back up above that level, 1483, right? As you can see there, gold settled just below 1476 this week. So that's the longer term chart of gold. Let's look at a shorter term weekly chart. And here we'll focus on these falling wedges that we've had in gold. I've kept the retracement levels there so you can see where we are, right? But if you look at the beginning of this year, we've had a falling wedge. We broke above that falling wedge, and that's when gold from May to September went from below 1300 to 1550, right? That was a huge move, almost non-stop, right? Very little corrections on the way. And ever since, we've been basically doing the same thing we did before the previous move. A falling wedge is usually a bullish consolidation formation in the trend, right? In the previous trend. And the previous trend has been up. You can see that the falling wedge from earlier this year as well. You had a trend from August 2018 when gold bottomed at 1160 as well. You had a trend up, and then you had a consolidation. So that's what I see here. Difficult to say when we're going to break out of this falling wedge to the upside. I've counted the weeks here. In the first wedge, we broke out in the 15th week. Believe it or not, last week was the 15th week. We're very close to breaking out. Will it be this coming week, the 16th week? I don't know. Maybe. So that's the gold chart there, shorter term chart. Let's look at silver, because I think silver, it's very important that silver starts performing, outperforming gold to see gold do very well. Historically, in the precious metals bull market, you want to see silver doing well relative to gold, outperforming gold. This is a weekly silver chart here. We're forming a flag here. We're still within the flag, which is a consolidation, right? Still quite far away from the top of the flag, but as we know, silver can move very quickly up or down, of course. So to finish off, I'm going to look at the gold-silver ratio. This is how many ounces of silver you need to buy 1 ounce of gold, right? The higher this ratio, it means that gold is outperforming silver and you need more silver, right? And vice versa. When that ratio drops, it means that you need less silver to buy 1 ounce. It means that the price of silver is outperforming the price of gold in Federal Reserve notes, right? Historically, of course, we need to see this ratio dropping in the bull market. As you can see here, since September, it's been rising. But if you look at the retracement there, Fibonacci retracement, we topped around the 61.8 retracement, and we've been hugging that 50% retracement line. So in my opinion, it's imperative that we see silver performing well or outperforming gold for us to see a general move higher in the precious metals, or a general move lower in the fiat dollar, of course. Things can happen differently. I guess you could have gold continue to outperform silver and continue to go up, but it's unlikely in my opinion. So there you go. I hope this clarifies why looking at the Dow Gold ratio is so important, seeing that gold has been the most stable store of value for millennia, right? I hope this also clarifies for those who want to get involved in precious metals, how to get a hold of gold coins, gold bars, or silver coins, or silver bars, right? If you have any questions, ask them in the comment section and I'll be happy to answer them. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Make sure you also hit the little notification bell above to be notified of all my new videos. And if you're not a subscriber yet to the channel, think about subscribing. I wish you all a great weekend. Take care. Bye.